the humorness and playfulness of setting a milestone as a day trader. It's about tips and jokes, how to become a successful and a high rate of a day trader, and top rankings of day trading scores. You know, the reality of how I became a day trader was, like, I researched how to make money online, and what popped up on that screen was binary options, as what you're seeing on TV, and that's the fastest way to build your wealth up. But it took sources, and it took a glance and what the platform looks like. Like, I was involved with financial stock options about 2 years ago. It became lightweight to trade without guidance and experience in what direction to choose at. Hey, I learned how to trade without tutors, without guidance, without anybody teaching me how to trade stocks. I learned it manually. Like, what it takes is the skills. What it takes is practice. You have to be practical at it. You know, in all assets, the numbers oscillate of where your hands are equivalent. It's always momentumness to use charts to help you become anticipated and what your comfort of your salary revenues are doing with the weekly terms. Like, you can make couple hundreds weekly by week. You can liquidate your trade, meaning you can cancel out on it. Absolutely, you can do it. Absolutely, it's unlimited of canceling any asset, but you get less return back, and you get like a little loss, a slight loss of an inch. You know, all assets have a buy or a sell of type of options. It's all types of calls, all types of puts. You know, each one has to discern what type of options you can set your limits to. It's a whole diversity of stock options to select the contract to choose, such as what a lot of people haven't heard of was binary options, touch options, boundary options, meaning you trade it inside the zone, like inside the range and out of the range. And turbo option means quick speed type of options, like fast options is like 5-minute options, 2-minute options, 60-second 1-minute options, and 30 seconds. It's all common to doing 30 seconds with forex, with currency pairs, and currency pairs are 24 hours of trading, and in the sessions and out of the sessions, and it's accessible on each broker. There are chiliades of brokers and exchange out there, and every platform is exclusive and what is affordable out there. If a person is ignoring any one thing, like when a person is unexperienced in something, inexperienced in trading, then I would advocate you open up a demo account. And demos don't last that long. It's temporarily. And I would tell the agency, I would tell you the agency to perpetuate it for about a year until you get a mediocre percentage out of the rates to see if you have an excellent order, like if you have an excellent score on it. Like, take a look at it. Like, most investment platforms are contrasted scenarios on all assets, explanations that options are awkward and solid for people it's to character at. Like, all different brokers, all types of options, all types of categories are not suitable for all investors. It's just a note to understand that for them. And spread options that I'm familiar with, and some people are familiar with, are, I would say, it's discredited because you have to keep your eyes on that graph, keep your eyes on the moving numbers before you request a ticket on that trade. Because it's like a range when you place a spread bet in between the index, commodity, or forex price with daily, hourly, and it can be weekly too. But globally, there are 10% of day traders who make successful profits out of it. Out of it within 24 hours. But it's more of 90% of day traders, of 50% of them, they lose more percent of their money than what they make and more of what they deposit with their capital. When you're planning to request a trade, you consistently have to glance at the signals and graph or get support through the buzz. Like if you plan on placing a trade, you really gotta look at your technical chart, like technical indicators and moving average, or get assistance through the phone line and look at the news at that time. But you know what the actions is and the consequences with day trading, it's no humor to get enthusiastic with the value of excitement. When you elaborate with this position, the affections can come hysterical in the mix of the ranges and the winnings and the losing chances. In my assumption, you should trade with authentically, so the perceptions won't distress you out. You always want to understand before pressing a button to order. Like, you don't want to trade with emotions. You want to keep that separated besides that, or hide those emotions as you can. Fight that. Fight it out. Most assets are volatile, such as common forex, like major forex pairs that's publicly traded is euro with the US dollars, Australians with the US dollars, Australian dollars with the Japanese yens, euros with the pounds, and the pounds with the US, and more. Like, I'm gonna tell you like a single index on currency. US dollar rates are not that good, and euros and British pounds. Those are the most three populated currency pairs that people trade, especially when people travel, like when they go out overseas. Not to exchange rate. Exchange is different by a couple percent. Like, I would say $100 might be about 68, something like that, or 60. People say it's effortless, especially in the short term when the markets are closed. It moves in a rapid pace, especially with forex pairs. But when you're trading forex pairs in the long term, it's so erratic because money price indicates very often. But other equities, such as indices, like indices is similar as bonds. Stocks with stocks that comes out of index, like a single company, and commodities are erratic on some of the days. But single stocks is like a gamble. It's not even guaranteed. And plus, it's new companies with stocks. New companies with stocks are erratic because you don't know how it's going to affect the next day. I would dissuade stocks on the traded in day sessions. Like, I wouldn't trade on single stocks on trade day session. I would just do an index or a commodity on a day. But some currencies maybe, depending on what the money is doing. With binary options, with the invention of it, it's a yes and no propositions, meaning there is no choice, meaning you should buy or sell on the underlying asset. What binary is, it's above or below strike price during expiry rate. Like hourly, 30 minutes, daily, till it closes. Like, binary options are tricky with trading to a lot of investors, to common investors. Like binary options are not owned in America, it's owned in Europe. It's owned by the Cyprus type trading commissions like Cyrus SEC. Some of them are not regulated in the US. And spreads is regulated in the US and some is not regulated in the US. Like, you know, with the understanding with binary options, with the Euro style types of options, you have to understand what the call or put is on any time frame, expiry rate of a date, of a time. You really have to keep your eyes on the market until you wait until you trade. With trading on index using binaries and commodities are very condensed because it moves and you really have to click it delicately. Like, it's always going to be brand new companies and stocks that's going to go indexes, but indexes change every year. It just gets updated couple months. But brand new companies with stocks are always going to be a risk. It's never going to be a guarantee, and it's delicated because it gets liberated every couple months. But average amount of people, meaning that 65% of forex traders make earnings by trading on short terms. Like, people say it's easy. People say it's easy. It's all simple how to do forex, because the numbers drop one pip to another. Meaning it's always gonna shake and shake and shake. You gotta invest your money quickly as possible as you can. And you really gotta close out on it. Like, if you close out on your investments, you're responsible. If you don't close out, you're irresponsible of it. Because you're not watching where your money is. You're not watching where your asset is, your currencies are. You will always have a record and a document of your trading antiquities as soon as you access your account statistics. We all have to gain ourselves from failure to success by rehearsing. Meaning you have to practice, step up, climb up there. And we have to recognize what is the characteristics between the futures and the composites. You know, composites mean the markets are live and to open, meaning it's a live type of trading. Like if you day trade, and it's called live trading at the same time. And what the futures mean is you trading when the sessions are not available, meaning you trading way before the markets open, and you trading right after the markets open. And people buy or sell that fast. And markets have to stay flat to be in a profit. And markets move a lot, and it causes it to crash at that time. There are all categories of expiry rates, such as 20 minutes, 1 hour expiry rate, 2 hours, 5 hours, and daily and weekly. And it's only for trade. It's only for the day trading position. Like, let me tell you about U.S. markets. Like, U.S. markets have a high diversity and a higher economic rates for the largest capitalization of investors and shares of over 5,500 per day. Like, commodities are traded in flavors like metals, like gold, silver, copper, and like barrels, and an ounce in an asset, like other commodities like copper, gold, silver, crude oil, gasoline, soybeans, corn, chocolate, coffee, vanilla, orange juice. Like U.S. sessions where commodities are volatile and they move in rapid paces. Because it's gonna be all foreign assets that's gonna trade in commodities, all investors. Commodities is everywhere that investment spread. It's a circumstance become affluent as a day trader. Like, the trick about the people's population of the exchange is China. Like Chinese stock markets are very speculative, and to all Asian markets are very volatile rates and consistent with the financial crisis. Like European Union and U.S. markets are very adjustable the way the markets move with more than a sector of component. Like global Europe, global America, the way it moves. Like I want to tell you, like non-common assets, like the small caps and large caps are traded separately. Meaning it's not traded the same way that's traded. Like small caps meaning there are non-major companies, but it's public, but it's not too publicity of a company that are upstanding and the market moving variously than the large zones of the caps with the risk to it. Like we all have to perceive with the terms and what is within the money type of investment and out of money type of investment. Those terms I'm articulating about remain on how the traded option tools you use, and the options to trade on is ladders, meaning it's the same as binary option, but it's different than binary options. Like ladder options is the same, and it's just like single options, meaning that the asset has to expire in the zones to acquire a profit. Meaning when you buy, the market has to be a 50 as a strike price to be in the money as well. It's a 0 if your investment is wrong, and it's 100 when your investment is right, just for one size. It's always going to be a 0 to a 100 of a chance to a settlement for one size of an individual trade per one single contract. When you trade in the money, my theory is chance to chance that you will lose big and you have less profits in a less percent of a way. Like if you don't want to risk in the money, has to be from $50 to $59 per strike price, which I would advocate for traders, and I would tell my teammates when you trade in the money, I would recommend from 50 to 59 as you buy. And if you're selling, you have to go from 41 to 49 if you're selling like in the money. Like more earnings and more rewards, less trouble. What I will talk about is what I strongly would recommend, strongly require for people is when you trade out the money, my theory and my prosperity is you will risk less and you win big. If you were to trade from like you're buying 35 per strike price to 45 per strike price as a buyer, and when you're selling, you want to sell from like 65 to 55 to make the profits at large. And I will consistently trade out the money type of option to make my risk significant for a couple sets of a contract. It makes my money more manageable, just like making a purchase. And it's invariably a risk in some types of investments, such as real estate and stock markets. And it can be a gamble if you're unfitting with the category and an asset that you're not alert with. I would assert that you always want to calculate what is in your account before you trade. Trade with your capital as wisely as possible. Like use your money sensibly by not putting everything in a cart at one time and invest and trade on goods just like you're making a purchase. You're supposed to invest your money just like you want gold or silver. And everybody has like plans and everybody wants financial freedom. The reason why people have to invest is so they can make extra income in their livings and in their equity homes and their equities. Everything is a cost and everything's gonna be a fee. Because everybody has to pay like their house, their gas, their electricity, their water, everything, their booth, their studio, their pool, everything they have to pay. Everything is a price to arise. Because anything could fall, anything could stand. It's always going to be stop losses when you trade, and you just want to set yourself some limits and limits. Anything people like to eat can be a commodity. Anything that likes to be in hand is good. Like I would say currencies can be a commodity too. It's like a self-commodity at it. But you know, indices is almost similar as bonds because they have like Euro bonds, US bonds. They're gonna have pairs which is gonna perform better with bonds. Like we don't know what people are gonna be 5 years. You can't predict what's gonna be 5 years from now. Investments can be like events, like elections, and who can become like candidate or governor or mayor and attorney to our nations.